Hi, it's the 28th of February and welcome to our 5-minute tax update, which for this month will cover local and international developments for the month of February 2020. So let's start with a closer look at the local developments. During February, the amending law regulating the settlement of overdue taxes was published in the Official Gazette. According to the amending law, the deadline for the submission of applications for relief from interest and penalties on overdue taxes for the years up to 2015 is extended to the 14th of August 2020. This deadline refers only to the settlement of overdue taxes which have been assessed by the tax department and appear as payable on or before the 14th of February 2020. For tax liabilities which are assessed after the 14th of February and relate to obligations for the tax years up to 2015, applications must be submitted within 6 months from the date on which the tax becomes overdue. In addition, the deadline for the submission of the 2015 tax returns in order to be eligible for the scheme is extended to 30th of June 2020. It is noted that taxpayers should not have any other outstanding compliance obligations or overdue taxes at the time of submitting an application. The last amendment relates to the cancellation of the installment plan. This can occur where the taxpayer fails to pay cumulatively any 5 installments instead of 3 under the previous law and fails to submit a tax return and/or pay a current tax liability within the deadline provided in the relevant law. During the same month, the tax department published the 10-year government bond yields for the following countries as at 31 of December 2019 for the purpose of calculating the notional interest deduction. As a reminder, a 3% premium is added to these yields for the purpose of calculating the NID deduction. Our next development relates to the current Cyprus tonnage system, which is in force since 2010. Last December, the European Commission approved the renewal of the system as it stands today for another 10 years. The Council of Ministers has approved the relevant bill, which will soon be put to Parliament to effect this extension. It is noted that the number of companies that have joined the tonnage tax system since 2010 has increased significantly, confirming its attractiveness and its wider positive impact to the economy. A circular was issued by the Tax Department in February confirming the coming into force of the protocol to the tax treaty between Cyprus and the United Kingdom, signed on the 19th of December 2018, which entered into force on the 2nd of October 2019 and is effective from 1 January 2019. The protocol amends Article 29 of the treaty with respect to government service pensions of individuals who are not nationals of the country in which they are tax resident. On the 1st of January 2020, the protocol to the tax treaty between Cyprus and Ukraine has entered into force. In accordance with the protocol, the new withholding tax rates are as follows. For dividends, 5% if the beneficial owner is a company which holds at least 20% of the capital of the company paying the dividend and at least has invested in the acquisition of the shares or other rights of the company equivalent of at least 100,000 euros, or a 10% withholding in all other cases. For interest, a new withholding tax rate is now 5%. The protocol also amends the capital gains article, which now provides for the taxing rights of property-rich companies, subject to certain exemptions, to be allocated to the state where the property is situated. Moreover, the protocol controversially provides for the allocation of taxing rights to the state of residency of the alienator in the case of disposal of other shares, as long as such a gain from the disposal is subject to taxation in such a state. This is a divergence from the standard OECD wording And given that the two states have also agreed in the protocol to a most favored nations clause, in case Ukraine agrees with other states more favorable terms, then such provisions will need to be revised. We understand that Ukraine has indeed signed new treaties which do not provide for such a controversial provision on the gain from the disposal of non-property rich shares, so it is expected that measures will be taken by both states to remove such a provision. Watch this space for further developments. Moving on to international developments, the Council of the European Union has published a revised EU list of non-cooperative jurisdictions for tax purposes. In addition to the 8 jurisdictions that were already on the list, the EU Council decided to also include the Cayman Islands, Palau, Panama, and Seychelles. These jurisdictions did not implement the tax reforms to which they had committed by the agreed deadline. The list of non-cooperative tax jurisdictions, which is part of the EU's external strategy for taxation, is intended to contribute to ongoing efforts to promote tax good governance worldwide and will continue to be regularly reviewed and updated in the coming years. We will close off today's tax update with a brief reminder of the upcoming deadlines. The 29th of February is the deadline for submitting objections on assessments issued in December 2019. As a reminder, although the normal deadline for submitting an objection on an assessment is the end of the month following the month in which it was issued, for December, the law allows an additional month for the submitting of an objection. As the deadline falls on a Saturday, the effective deadline is Monday, 2nd of March. 31st of March is the deadline for the electronic submission of income tax returns for individuals and companies preparing audited financial statements for the tax year 2018. This concludes our tax update for this month. Thank you for watching.